Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello everyone, I'm Jeremy Mullen here today for our top stock picks segment. Today's pick is United Natural Foods, ticker symbol UNFI. The stock is a Zacks rank number one strong buy that is a leading distributor of natural, organic, and specialty food in the U.S. and Canada. Headquartered in Providence, Rhode Island, the company distributes products to over 30,000 customers. This has been an interesting year for the company. Strong demand from the response to COVID-19 has been a tailwind. As more people flock to the grocery stores in response to the pandemic, products have moved off the shelves quickly. The pandemic was a big positive for the company. And now the question is if the company's latest success was purely because of the lockdowns or the start of a bigger trend. Let's take a look at the recent earnings. On September 28th, the company posted a large earnings beat, surprising the upside by 49%. Additionally, the company beat on revenue and raised fiscal year 21 guidance. EBITDA rose 19% on strong sales and cost leverage. Despite the beat, the stock slid after CEO Steve Spinner announced retirement. However, the guidance hire has forced analysts to hike their estimates higher. For next quarter, estimates have jumped 70% over the last 30 days, and for next year, estimates have gone 39% higher over the same time frame. Looking closer at those fundamentals, the company has a market cap of $1 billion and a forward PE of 5.5. The stock has a Zacks style score of B in value and A in momentum. Now, recently, the company issued $500 million in senior notes, which was upsized from the $400 million the company was originally looking for. This shows pretty strong demand. Now, the purpose for the move is to repay outstanding amounts under its term loan facility, and basically the company continues to improve its debt situation. This move to restructure the debt will help finance costs down the road and improve the bottom line. Now, looking at the technicals, we're going to look at the chart here. The stock has had a lot of good signals triggering of late. After the earnings and the announced CEO retirement, the stock fell under $15, coming shy of this 200-day moving average, the red line right there. Since then, the stock has bounced back aggressively all the way back to 20. Now, that debt offering was right in here, and at first the stock came down and tested the 50-day, and we bounced back higher. So we're above all moving averages, and what can happen here is if we clear this 200-day moving average, there's a large short position that might want to cover. What happens is the shorts, they'll get on the bid and they'll start buying. And if we get another catalyst, this could happen very, very quickly. Over 11.3 million shares, or 32% of the float, is short. If we get that positive catalyst or an upgrade or it's just something, or a big firm just notices their debt situation is improving, we should see these highs taken out from earlier in the year and the stock fill these Fibonacci targets. How do I get these? The highs to lows, 61.8% is broken. It creates this 161.8 target, and that's what I'm targeting short term if these shorts have to cover. United Natural Foods has had a rough couple years since its super value acquisition. However, the fundamentals have improved and the stock is responding. The improving debt situation, the valuation, and the short position makes the stock very attractive at current levels. Short term, we have those $28 targets, but even longer term, the stock and the company might be able to go back to levels that it was 3 years ago, and that's talking about $40 per share. So I'm like this stock, and that's my top stock pick for the day. And here is Brian Boland with his.
Thanks, Jeremy Mullen. What an informal and interesting idea there. UNFI. That's a great top stock pick for the week, but mine's even better than that, much better than UNFI. Mine is eGain, E-G-A-N. It's the eGain Corporation. It's a Zacks rank number one strong buy, and it has what I love to see. This is throw a shout out to my aggressive growth stock videos that are usually done on Thursdays. Haven't done it in a little bit, but planning on doing them again shortly. What I love to see in those is a very strong growth score, A, and a very weak value score, F. And when I see that divergence tells me right away that I am on the right path. And let's see why this stock is a Zacks rank number one. So first of all, let's take a look at where I love to start off is the earnings history. And so you see that at the bottom of the detailed estimates page, and you can see detailed estimates right there. But we see all these beats and a meet. So one quarter, actually it's really a beat. There should be 4 beats in a row because the estimate was a 0 and the report was a 7 cents. So it should be, like a 700% or something like that, just as it is there. So we should see much better numbers really there. But good to know that we know that's the case. So they've been beating the number. They've been beating it pretty handily. And after they beat it, what do we see? We see earnings estimates move up. We see 1 cent move to 6 cents. We see 3 cents move to 4 cents. That's just a penny. But here's your big move. And this is what the Zacks rank really cares about. It's the annual number. And when it goes from 7 cents to 20 cents, that is the move in a great direction that we love to see. Next year as well, 7 cents to 22 cents. And, when you get that move and also see the earnings growth, there's going to be 20 to 22 cents. That's a 10% earnings improvement there. So we like to see that. And that'll push the Zacks rank to a good spot right there. So what do you have when you have a stock that's beating all the time by a big amount, where you're going to have a big multiple? 86 times forward, 62 times trailing. But you did have 13% top line growth in the most recent quarter. And that's important, especially because in the pandemic, we have a lot of names that just aren't growing. So when you see double-digit or top-line growth, that is something good. Now, obviously, this is a software name. So when you look at price to book, it's going to be an asset-slim company. So 15 times the book is, it's a lot, but it's not, an incredible. It's not a 40 or 50 number. But certainly that number could come in a little bit. The price to sales at 7 times is right around where software numbers come in. But here's the thing that I want to point out. It's this gigantic growth in operating margins, going from basically 7.8 to 10.3% in the last quarter. And that was during the pandemic. So when you have good operating margins, obviously they're doing things better than they used to. They're having growth. So we see better execution, and we see that via the margins, and more execution via the growth. That's going to lead to better earnings. And when we have something like that, we're going to see the stock move up. So I think I have this all set up. Oh, I don't have it where I want it. Let's do the EPS price and consensus so we can get a chart. It's going to come right up here. I promise you. There it is. So now you see, here's the effect of this quarter, then the next quarter, where we see that margin impact. We see that top line growth. Everyone else is kind of slowing down. This stock is speeding up. So a big move here over the last little bit, moving the stock to 18. But we can see that it was up this high previously back in 2018. But things are looking much better for this stock. So I definitely want to put it on your radar screen to make sure that you see it too, that you're watching it too, because I like it. What do we got here on our price today? Look at this. It's moving and shaking. So go take a look at EGAN, EGAN, and that's my top stock pick for the week. We'll see you again next time.